Stocks edged up in the final hour of trading today in anticipation of Apple and Amazon's earnings. Now, Apple and Amazon both missed expectations. What was your key takeaway from the reports?
Well, in the after hours, the futures sold off a great deal. I mean, for Amazon, it was a miss. They missed on revenue, they missed on earnings per share. It's very disappointing. For Apple, it's disappointing as well. They missed on the earnings per share by about 8 cents. But the trouble there is that the whispers were much higher than the published estimates. The whispers were maybe 70 to 90 cents higher than what we were saying we were expecting. So for them to miss what we were saying we were expecting, this is perceived as pretty bad for Apple. Revenues, nothing great there, no great surprise. But I think with these two tech giants having their issues this afternoon, I mean, we're threatening 1,400 on the futures market, which is a level we've been trying to stay away from in the cash market. I don't think this is a very good thing to come towards the end of a bad week. We had macro data this morning. It was somewhat troubling. The market tried to sell off on the news, although it opened higher on the good news out of Britain. So, I mean, I don't know. I think this is a pretty negative thing. Although the one silver lining is that you're seeing those utilities and those dividend stocks still move in lockstep with the market. So it could mean that people are trying to say the risk is over being taken off. But this Apple news and this Amazon news is going to hurt the market tomorrow morning.
And on the macro front today, durable goods orders came in better than expected, but the underlying data was actually quite mediocre. What does that tell us about the GDP figures tomorrow?
Well, you know, the durable goods order was at first impressive, up 9.9%, above consensus. Happy, right? No, at the core, it was only up 2%. What it was Boeing had received aircraft orders, 143 different aircraft orders last month, up from one order the prior month. They were almost the whole increase. Now you take out military aircraft and it gets even worse. So what it looks like is that corporate America is preparing for the fiscal cliff that looms in January. And it's a very shaky thing going into the fourth quarter. But the GDP we're going to get tomorrow for the third quarter, the consensus around Wall Street is 1.9%, but I think we're tracking a little lower. I think we're looking 1.7, 1.8%. So I'm going to say 1.8%. That's my call. But I don't think that's going to help the market much when it comes out on top of what we saw from Amazon and Apple.
And what other key market drivers are you going to be focusing on tomorrow?
Tomorrow, it is not a lot around the globe. It's GDP, but don't forget we got unemployment next Friday. So we're going to get 2 big Fridays in a row ahead of the presidential election. And anything that comes out from the presidential election will be looked at by traders.
And tomorrow, Comcast and Marke will be reporting their quarterly earnings. This is Andrea Say reporting for The Street.